It is the 29th of May, it's Wednesday. Looking at the stock markets, E-mini S&P lower as I had hoped, as I had expected, and it does look like we are forming this right shoulder, which of course I've been talking about for weeks. So that's all played out nicely. We're testing the neckline as I speak. As you can see, 2800 is going to be absolutely key. We know this already. There's the 100-day moving average rising up to 2790. So if you want to be absolutely certain that it's broken, wait for the break of 2790. Then we've got 200-day moving average at 2777. So that a break below there would be further negative confirmation. It does look like every time we bounce, we don't reach the previous peak, which is typical of a bear market trend, and we have been in a bear market trend for the whole of May, as you can see. So if we bounce today, well, we're going to have some resistance around 2820, 2825, stronger resistance around the 2835, 2840 area, which would look like a good sell opportunity for me. Clearly, if we do break well above 2845, that would put bulls back in control, really. By the time we get there, we've got the 200-hour moving average is going to be around the 2845 level. And for obvious reasons, we're up through the fibs, we're up through the trend lines, we're up through the moving averages. That would make me change my mind. Nasdaq's been hovering around its neckline for 2 or 3 days, so we're retesting it now. All this does look like sooner rather than later we're going to break lower. I wouldn't rule out one more bounce. We've got resistance at 73.50, 73.60, and again at 74.10. So I would need to see the price above 74.10 in the Nasdaq before I turned my view to bullish. Dow Jones lower again on Tuesday. The neckline here comes in at 25,215. So break below 25,200 is our completion of the pattern and our sell signal, which I do expect to happen sooner rather than later. Yesterday we reversed from moving average resistance, as you can see, so I can stick a trend line on there. I think that would look alright. Nope, not that one. Yeah, that one looks better. So if we bounce, we should have some real strong resistance around the 25, 550, 600 area, and we'd have to be up through 25,700 for me to change my mind and be more bullish on this market. Well, the dollar index continues to fool me. I've laid out my argument for a bearish outlook for the US dollar, and then we've gone and reversed off no support really. I don't really see where that support has come from. Let me just have a look and see if this is a trend line that is worth paying attention to. No, not really. And I don't actually think it's a correct trend line because we're not taking into account this low here, but I just thought I'd try it. Okay. The hourly picture is very confusing for the dollar index. We're now above recent moving averages. I can't make much of this pattern at all. Well, I can because I think it's a double top. So we could just be bouncing. I've got to take the bigger picture, and the bigger picture looks like a double top, negative candles, everything I've already mentioned. And I wrote an article for the premium subscribers yesterday. So I would need the index to hold a 61.8% fib at around 98.05. If it gets back above there, then I'm going to wonder whether we're going to retest the double top. And the third time around, I don't think it would hold. So we'll just have to see what happens around 98.05. Now the euro US dollars fooled me too. I thought that this 111.95, 111.85 area would hold 500-hour moving average. We've got the 100-hour moving average coming up to meet it. We've got fibs going on there. We've got the double bottom. We've got the bullish candle from Thursday. It was all looking pretty bullish, and now we've gone and retraced 50% of that move, and we're holding below the hourly moving averages. So I'm confused. I did not expect to see this big red-bodied candle after this big engulfing candle on Thursday, another blue candle on Friday. So anyway, we've retraced 50%. If we don't hold above 111.45, then I'm going to wonder whether this double bottom will turn into a triple, or it'll be tested again, and I don't think the triple bottom will hold. Now, although the euro looks weak, and I know there's all that shenanigans going on in Italy with budget deficits or whatever the headline is, the euro is, the Aussie is holding up fine. This is the Aussie dollar on the hourly chart. Now we've got the bullish moving average crossover, the 100-hour crossing over the 200-hour moving average. We've got just a consolidation of the recent gains, trading very nicely in between the short-term fib levels, 69.15.10 support, 69.40.45 resistance. We get above 69.50, or by the time we get there it'll probably be 69.45. Then we will have beaten the 500-hour moving average, and that will look pretty positive. So I've got stopped out of my euro longs. Unfortunately, I decided to have a bigger euro long position than I've got an Aussie dollar long position, but I'm comfortable with it. I just need the market above 69.45 to confirm. Actually, I'll probably add to longs if that does happen. And the New Zealand dollar, I'm comfortable with the long position. We're consolidating over the last 2 days, but I don't think those candles are particularly negative on the daily chart. And then when you look at the hourly chart, it all looks fine. Again, we've got the beginning of a moving average crossover, 100 over 200 hour moving average. This is just consolidation. We're hovering around fib resistance around 65.50, but we're not really rejecting it. So what do I need? I need this market above the 500-hour moving average, which is currently at 65.70, but it's declining quite rapidly. By the time you watch this video, it might even be around 65.60. So a break above 65.60 should be pretty positive and start the next leg higher in the recovery, which I do expect. And then we're looking at 65.85, 65.95, a lot of fib resistance up there. So we could pause, we could even come back down a little bit. Just watch that level. I think a short would be a little bit risky because I do see this as a good recovery, but there's no doubt that there's a lot of fib resistance at that level. But having said that, there's really nothing around 65.90 on the hourly chart. So yeah, and I don't think there's anything on the weekly chart. 65, no, not really. So it'll probably just be a temporary pause. Dollar continues to look weak against the yen. We've got resistance up around 109.80. We didn't manage to get there yesterday. Who knows? We might just hold below the 100-hour moving average, which is now at 109.60 and declining. A break lower in stock markets, as you know, I expect to complete those head and shoulders patterns, will certainly help to push the yen higher as a safe haven. Just throw some extra trend lines on here for future reference. Yeah, I think no, that doesn't look right. Yeah, that'll do. Okay, there you go. So we've got some sort of triangle pattern going on here. We've got some support around 108.75. That will be the best support. We've got resistance around 109.80, 109.90. So break above 110.00 would be more positive. But in the meantime, we're just trading within these trend lines, I think. Cable, I suggested some sideways direction, and that's what we're getting. I wasn't confident enough to call for a recovery against the dollar, but that was a nice resistance area. The fib coupled with the 200-hour moving average, so that's worked quite well. Obviously, support down at 126.00. It's not very strong support, but that's the previous low, so that's the level that we would have to hold. Otherwise, we start a new leg lower. We're oversold, but I wouldn't pay too much attention to that. Canadian dollar, US dollar versus the Canadian dollar, showing signs of weakness, the Canadian dollar. Perhaps the US dollar can finally push higher. I know that this is, well, oil's been weak. Perhaps that's a reason why we could see a weaker Canadian dollar. Anyway, I can't get too excited about this. I'm going to have to see another day or two's activity before we can talk about a proper breakout. But obviously, we would look better above 135.15, put it that way. Gold continues to do nothing interesting, shall I say. Up a bit, down a bit. We're just moving sideways. There's no clear pattern. I don't really know what's going on here. I lost track of gold a few days ago, and I'm kind of glad I've left it alone. Okay, we have a little bit of resistance up here in the 1288, 1290 area, but we didn't even get there to sell it anyway, so I'm kind of glad. Yeah, glad I've left it alone. We've got some decent support down here around 1276, 1275, fair enough, and I think I put it on the gold report. We've bounced off that, but I can't get excited. Silver outlook remains negative. This actually is working out okay. Unfortunately, we didn't get a chance to set up around 1470, which was my sell level. We've collapsed. We tried to break below this trend line. Again, you can see these little tails here, these little candle wicks, but we never closed below it. So we're just in that little declining wedge pattern. So 1430 on the downside, 1465 on the upside. Those are the levels you want to trade, and a break below 1425. Yeah, that would be another sell signal. Oil's managed a bit of a bounce back, but good resistance at 59.50, 59.70 seems to have put a halt to that. Where did we get to? 59.57. So obvious reasons for that, 100-hour moving average, and we've got those fib levels there. I did say that gains are likely to be limited, so there you go. I'm happy with with us holding that resistance level. If we continue higher, which I think is unlikely, we should have a really nice selling opportunity around 60.25, 60.35.